Hi, Andrew Bell here with you. And I am really truly sorry to hear about the terrible situation so many people are finding themselves in at present, with yet further lockdowns in parts of Australia and restrictions for others. It just reminds us of how lucky we are here in Queensland. 20 degrees today. Fingers crossed that continues that good luck. Today I want to talk about one of the missing components of the real estate market, which has been investors. At the very time that investors were needed in greater numbers than ever, they've been missing in action. There is no clear reason for it, but one can only imagine as the surge in real estate prices gained momentum in the second half of 2020, investors focused on returns would have been priced out of the market as they saw price increases rising further and further. However, with rental values now increasing substantially and with the realisation that they've been missing out on that capital gain when they own properties, they're starting to come back into the marketplace. I have some really interesting information in this space, but it's also one of the things that our office is truly focusing on at present. You know, we have a record number of properties going to auction throughout July. We had something like 80 odd properties, and many of those properties would have been ideal for investors to buy. There's such an acute shortage of rental properties here on the Gold Coast, and we're in desperate need to help many people who are migrating here from Victoria, New South Wales and other parts of Australia. And the first thing they do is get a rental property. Dire need for it. Now, the latest Australian Bureau of Statistics figures show that the value of national investor lending rose 12.7% in March of this year to 7.8 billion. And whilst below the usual 33% long-term average of the total number of buyers in the marketplace, where we're currently at 25.9%, we're certainly well below those historical norms, and we need to get them back up again. Now, first home buyers are beginning to be pushed out of the market with less government support following the end of that historical high home loan grant period. And we're now seeing the investors returning to the market in greater numbers than first home buyers. Now, there's upside here. The significant jump in the annual rentals, whilst adding to the cost of living for tenants at present, will indeed help them longer term, as the increasing number of investors entering the market means that there will be more rental properties in the future, and therefore softening rents just somewhat. However, for the present, there is a dire need for significantly more rental properties. It's not unusual for us at the moment to receive anywhere up to 50 odd inspections on any new rental property, which we bring to the market. And there, of course, can only be one person who can be helped in those situations. So 40 odd 9 people miss out. There is constant surprises in our marketplace, and one of them is that it is almost impossible to negative gear these days. In fact, the proportion of landlords with negative geared rental properties has fallen to below 60% for the very first time on record. This, of course, is a combination of two things: the reduction in interest rates because of record low interest rates at present, and the second is because of the higher rental rates that landlords are receiving. Of the 2.2 million taxpayers owning at least one rental property, 1.3 million declared a net rental loss in 2018 and 19, according to new data by the Australian Taxation Office. The net rental income was $3 billion. There were 19,113 fewer negative geared landlords in that 2017-18 period. And that was the first fall in the number of negatively geared investors in 5 years. Now, you can just imagine with all of this increase in rent and the lower interest rates that the numbers over the next 2 years will be even significantly more. As a share of the total landlords, 58.6% claimed a net rental loss, the first time since records dating back to 2004 were kept. The whole thinking around investment has changed. In years gone by, investing in real estate was looked at as a tax strategy to use negative gearing to fund the purchase of real estate. Today, people look at it as vastly different, and they see it as an investment to give them annual income. Positively geared real estate. That's because for the first time in a long time, that can truly happen. And so when people have money to invest, the questions are, do I put it into the stock market? Do I leave it in the bank? Do I invest in some bond scheme? The answer, time and time again, is the safest investment of all is real estate, which appreciates in value and gives a positive annual income. Investors, please have a good look at the properties that we do have available at the moment. They're really committed vendors amongst those who want their properties sold. And we have tenants who are lined up for you. In fact, they'll be in place the day your property settles. And not only will you be receiving cash flow positive return, but you're also going to capture the significant capital gains that are occurring in the market at present. Name an investment that's better than real estate in the marketplace at present. Now don't forget, if you haven't yet booked to attend the Ray White Surfers Paradise Muscular Dystrophy Ball, it's on Saturday the 11th of September. There are only approximately 9 tables left. So book today via details on screen, whether it's for 2 people, 4 people or a whole table. So that's it for this fortnight. Best wishes to everyone throughout the country, and please, let's just pull together. Let's be more positive than we've been. We're getting very, very closer to the end of the year when I think our outcome will be vastly different around the whole COVID matter. So let's stay together. We're a wonderful country, and it's time for us to unite and just support one another.